Wall Street losses deepened on Friday, August 2nd, with a sharp drop in U.S. equities and U.S. Treasury yields at multi-month lows, after a weak jobs report fueled worries the U.S. Federal Reserve has been too slow to cut the interest rates, risking a more pronounced U.S. economic slowdown. Downbeat forecasts from Amazon and Intel hit the pricey big tech valuations, richly valued technology firms, exacerbating a sell-off that brought the tech-heavy Nasdaq Composite Index into correction territory. The cooler-than-expected jobs data stoked fears among traders that the US could be heading towards recession. An index or stock is considered to be in a correction when it closes 10% or more below its previous record closing high. The S&P 500 was down 2.5% in midday trading, on pace for its worst day since 2022 and its first back-to-back loss of over 1% since April. The Nasdaq slumped over 10% from its July peak, as a sell-off for stocks whipped worldwide back to Wall Street. A report showing hiring by US employers slowed last month by much more than economists expected sent fear through markets. It followed a batch of weaker-than-expected reports on the economy from a day earlier, including a worsening in US manufacturing activity, which has been one of the areas hurt most by high rates. According to the jobs data, 114,000 US jobs were added in July, well below estimates, and the unemployment rate unexpectedly climbed for a fourth month to 4.3%, renewing concerns that the economy is slowing. This follows Thursday's data, showing that US manufacturing activity shrank by the most in July in 8 months. Earlier this week, US Federal Reserve officials signaled that they are on course to cut rates in September, and the readings prompted traders to ramp up policy easing bets. The S&P 500 hit its lowest level since June 5th, and the index, along with the blue-chip Dow, is on track for its biggest two-day slides in nearly 2 years. MSCI's global stock gauge. MSCI's gauge of stocks across the globe fell 2.26% to 785.26. The Dow Jones Industrial Average fell 569.93 points, or 1.41%, to 39,778.4. The S&P 500 lost 119.44 points, or 2.19%, to 5,327.24. And the Nasdaq Composite lost 560.79 points, or 3.26%, to 16,633.36. According to a Reuters analysis of LSEG data, over the last 44 years, the index has slipped into correction territory, after hitting a new high 24 times, or about once every 2 years. The Nasdaq is still up 12% year-to-date. The S&P 500 has lost about 6% from its high, and is also up 12% this year. The Nasdaq's tumble comes as investors turn more wary of the highly valued tech stocks that have led the charge higher for most of the year, driven by excitement over the potential of artificial intelligence, AI. Lackluster results from Tesla and Alphabet last month compounded worries about stretched valuations. At the same time, there may be concern that weaker-than-expected results reflect a broader softness in the economy. Treasury yields fell sharply in the bond market as traders raised their expectations for how deeply the US Federal Reserve would have to cut interest rates. The yield on the 10-year Treasury fell to 3.81% from 3.98% late Thursday, and from 4.70% in April.